South Africa's ruling ANC party has officially submitted a report on proposed changes in the country's mining sector. These include a 50% tax on profits. Mine nationalisation, which has been the subject of many heated political debates, has been rejected as an unmitigated disaster. The latter is good news on a topic that has clouded investment decision-making for close on 3 years now. But the proposal of a hefty tax will not be received positively by the mining community. Joining us now, Freemarket Foundation's Leon Louw. Leon, ultimate criticism of this document is that this is in fact nationalisation dressed up as something else.
Well, in a way, it may even be worse, because the proposal that the state should become a shareholder at all in new mining companies and existing companies means that instead of what it now has, which is just collecting tax, in other words, having no risk, only being in the game if there's a profit, if you become a part owner, you become a loser too, so you're also on the downside. And perhaps the biggest problem here is not so much what is proposed as this endless changing of the rules of the game. What business wants above all else is stability. Have a policy, stick to the policy. This is a response to a bad idea, which was nationalisation from the Youth League, based on a misunderstanding of what the Freedom Charter says, which is another matter. And the solution to a bad idea isn't half a bad idea. It's just simply don't do it, which would have been the right way to go.
But let me ask you this question. The government's already a significant shareholder in a lot of the mining companies through the PIC.
Yes.
So what really changes? I mean, if bad decisions are made within corporates, then they're going to affect them, and as well as the beneficiaries of those pension funds. On top of that, government has now said it wants to become actively involved. You know, they haven't said exactly how they will become actively involved. Is it really having strong representatives on those boards, etc.? Because the PIC up to now have not nominated representatives onto a lot of the boards unless they've felt absolute necessity. So I can't see it as a half a bad idea. I mean, really, it's them just becoming more actively involved in the businesses and understanding them more.
Well, I presume you're not a member of the PIC, because I don't think PIC members would like to be told they're the government. These are privately owned pension funds by people who work for the government mostly,
Absolutely.
or used to work for it. And so, by the way, are big investors in the existing listed companies, the trade unions, and ordinary South Africans through pension and medical schemes. That is, institutional investors are by far the biggest, and a rapidly growing percentage of them are black. But nonetheless, they are quite right not to try to load their own people onto the boards. They trust management to the people who know how to do it. And why, you know, the government really, it should get its own core functions right before it starts wanting to dabble in business.
Are you saying that you don't mind government intervention into and government?
Well, you see, I think the story is just being read incorrectly, and the attitude from business has been fairly negative towards this particular paper. I mean, it's always negative when government says that they want to become more actively involved in business.
I mean, if
one goes over the last 15 years,
in favour of government, that's what I'm trying to establish here. Are you active?
I'm saying
you want government involved?
What I'm saying is, try to understand what it is that they're trying to achieve, rather than, you know, saying, "Oh God, this is a bad idea," because that seems to be the reaction right now. And to me, they've really, you know, a lot of broad strokes, very little detail, and I'm really waiting for the detail to understand exactly what it is that they're trying to achieve.
Leon, well, is the detail scant? You need more detail.
No, there's a lot of detail, but this is a discussion document, and it is, like the usual thing, is a quite extreme proposal, which is a bargaining chip, and then you go away and you negotiate something more modest. But business, by the way, doesn't necessarily respond against government intervention. On the contrary, I'm not a representative of business. Business usually loves government intervention. It wants government protection and subsidies and contracts and exclusive deals and so on and so forth, and the allocation of mineral rights. To the extent that whether business in general responds negatively, I don't know. The question is a greater role for government in mining a good thing for South Africa? And the answer to that is decidedly no.
Well, you know, let's look at one detail which has been put out there, which is the super tax on return of investment
Above
over 22%.
Yeah.
Now,
50% windfall tax.
50% windfall tax, which Australia has, Brazil has, as well as Canada. So it's not as though they're doing anything that's extraordinary, new, and challenging the world. So to me, it's very hard to understand why, a lot of people are reacting negatively even to that proposal right now.
Leon, it's in line with the rest of the world, as Ashraf points out.
You don't go around the world and search for something that's done badly in a good country and say, let's copy it. We've done that, unfortunately, with things like our consumer protection and national credit law or the financial advisory law. What you do is you go around the world and you say, what do the good countries do well and what do bad countries do well? And what you do in countries that are not regarded as the winners, like Australia, Canada, America, Japan, whatever, is they have to bend over backwards to attract investors. They have to convince people that they are secure, that it's predictable, that it's reliable.
I've got to differ with that one.
We do have a big problem in terms of income redistribution in this country. It's something that we need to get right. We've got a 24% unemployment rate. I do understand that minerals belong to the country in which they are mined. That for me does make sense. So there does have to be some income redistribution in this equation.
You're mentioning two contradictory things, income distribution and job creation. If you want to redistribute wealth, you don't create jobs. You actually reward people for not having jobs. If you want job creation,
I didn't mean it literally. I'm trying to say that we need to do something about the poor people in this country.
Yes, and the very simple thing to do is increase demand for their labour, which you do by making a maximally favourable investment and employer environment. If you want people to be employed, make it encouraging and attractive to employ them. What we do is, with our labour law in particular, is you make it very risky, very costly and very difficult and dangerous to employ people, and then you get surprised about the fact that there's unemployment. It's no surprise, it's an inevitable consequence of the policy.
Okay.
No, I think our labour law is not. I think our labour law is not really the issue. It's been education and training. To me, those are the two key issues. The other thing is, why is Rio Tinto and Anglo selling out of Pellerman? I mean, you can't say that currently and over the last 15 years, the investment environment has been that bad that they haven't received attractive returns on investment.
Well, it's been bad simply because we've had low growth and low employment. If we were not employing people, and other countries are, many countries in fact running at full employment, and the idea, by the way, that there's an international financial crisis is quite wrong. The vast majority of countries have continued growing, and especially in Africa have continued creating jobs. We're not doing that. So we have to say, what are they doing right in Ghana, for instance, in Mauritius, for instance? And what they're doing right in places like Ghana is they are going quite the opposite way, cutting taxes, cutting red tape, privatizing and moving, in fact, in Ghana's case, by the way, perhaps the highest growth country in the world as we speak, they have made the biggest shift of any country in the world from being a highly regulated to a highly free economy.
But moving from a really bad situation to an average situation, in my view, Ghana, if you just had to start spending money on infrastructure, you'd have double-digit growth for a long time still. You still have a lot of red tape. I mean, there are projects in Ghana that we've looked at which have been put on hold because of red tape. So, to me, it's not as clear-cut. Secondly, I have to take issue with your point about Australia struggling for investment. Australia has attracted significant investments.
Very successful, yeah. But you don't go and find the few things they do wrong.
No, but I don't think that the mining royalty tax is necessarily that wrong, because these companies are taking assets out of the country and redistributing the wealth elsewhere. Because you look at a company like BHP Billiton, secondary listing in London, most of its shareholders are sitting off that.
Oh no, hold on a sec. This is not a proposal for a withholding tax, which is what I think you're talking about.
Okay, can we go to, I want to chat about the super ministry. Now,
yes.
the super ministry to basically be the watchdog of the industry, so to speak.
It might surprise you to know I love the idea. We have far too many ministries. Very few advanced countries have as many as we have. One of the paradoxes of the world is that poor and backward countries have multiplicity of ministries, and rich and advanced countries have very few. So this is an idea to consolidate what I mentioned are 5 into one. Very good idea. And hopefully while we cut the quantity of ministries, we'll also cut the quantity of what they do proportionately.
Leon, before we go, just a final question. What is your biggest concern with the documentation as it stands at the moment, the discussion points?
Actually, it's not even with the super profits tax. And, you know, the bottom line is the aggregate amount of tax you take out of the industry and therefore the disincentive impact. My biggest concern is uncertainty. We need stable rules of the game. We need to stop changing the rules of the game all the time. This is like playing soccer with a referee who blows the whistle every 5 minutes.
Do we get consensus on that?
And say the rules are changing.
We need stability.
We need certainty, and I don't take issue with that. But the point is that, you know, the ANC has for a long time debated exactly how it's going to handle the mining situation. I think we are now getting certainty, really, after 16 years.
I'm going to have
debate.
to interrupt you there. Sorry, guys. I'm just cognizant of timing. Zaki from Cape Town, please go ahead with your question quickly, sir.
I have a quick point to make. I support the super tax on mining companies because I believe that our country for hundreds of years have had, or more than 100 years, have had extraction with cost to the environment, cost to people's health in mining, cost to our entire society, without significant amounts of money being put back and by companies. And I believe it's time that everyone in South Africa and everyone globally actually plays, especially corporations, play a much larger role in reinvesting in society, because without it, our societies will become unstable. I'm an ANC member, but I'm not a fan of the corruption and so on, and I hope that this tax will not be used to fund corruption, but genuine infrastructure spending.
Zaki, then we're going to have to leave it there. Thank you so much for your points, sir, and Leon Louw, thank you very much for joining us this evening. As I said, Freemarket Foundation Executive Director Leon Louw.